Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 12th of September 2019, and we're addressing the issue of the ECB, the European Central Bank, not only cutting rates, but also adding fresh stimulus into the economy via additional QE, and what this means for gold and silver. Yesterday, we published a video entitled Why Gold and Silver Prices Are Rising Again, in which we pointed out that there were two important dates for investors and stackers to look out for. Today, the 12th of September, when the ECB makes its announcement on interest rates, and next Wednesday, when the Fed Chair Jerome Powell makes his announcement on interest rates. We've placed a link to that video in the description box below. Now, we pointed out that as far as the ECB is concerned, overnight index swaps had priced in a 100% chance of a 10 basis point cut and a 46% chance of a 20 basis point cut. We also quoted Margaret Yang Yan, a market analyst at CMC Markets, who told Bloomberg yesterday, quote, "The ECB is expected to reduce further the interest rate into negative territory. The meeting could serve as a potential catalyst for gold, and investors are already buying into the rate cut expectations. Given that gold has had such a deep correction from its recent peak, investors are buying on dips," unquote. Well, a little over an hour ago, the ECB made its announcement, and it wasn't quite what everyone had anticipated. This is basically what it included. 1. The deposit facility rate paid by banks on reserves held at the EC, which were already negative, have been cut further from minus 0.4 to minus 0.5. However, at point 2, the Eurozone's main interest rate of 0% remains unchanged, and that was a surprise. 3. The ECB will recommence QE from the 1st of November, at which time it will start purchasing 20 billion euros of debt a month. Another surprise. 4. Its asset purchase program would run as long as necessary. 5. Interest rates would remain, quote, at their present or lower levels, unquote, until Eurozone inflation reached its target rate of 2%. We'll come back to that a little later. And 6, the ECB also eased the terms of its long-term loans to banks and introduced a tiered deposit rate to help banks. Now, the reaction to these announcements has been quite swift. While gold has edged up a little in anticipation all morning, upon the announcement it jumped from just above $1,500 to $1,523, and silver likewise from $1,817 to $1,846. This is against the dollar index moving up 0.31 points to 98.96. Sterling has strengthened against the euro from 1.10 euros to the pound to 1.12 euros, and also the dollar has strengthened further against the euro from $1.10 to the euro to currently just under 1.09. Market commentary has also been rather quick, with Ranko Beric, head of market analysis at Manex Europe, stating, quote, "At first glance, the ECB has not quite thrown the kitchen sink at the Eurozone economy. The QE package is shy of market expectations, which were 30 billion euros a month. But the bank is clearly back in the business of serious policy easing, and more aggressive action could easily be taken in response to a worsening in conditions," unquote. Now, President Trump has also been on Twitter, tweeting, quote, "European Central Bank, acting quickly, cuts rates 10 basis points. They are trying and succeeding in depreciating the euro against the very strong dollar, hurting US exports, and the Fed sits and sits and sits. They get paid to borrow money while we are paying interest." Unquote. He then sent out another tweet calling the Fed, quote, "boneheads," unquote, for keeping interest rates too high. Also coming out from the ECB are some additional technical and economic data stating that it expects GDP to rise by 1.1% this year, down from 1.2%, with it rising again in 2020 to 1.2%, but not as high as the 1.4% originally envisaged. President Draghi also blames, quote, "global issues," unquote, which some has regarded as a jibe against President Trump, and also the lower oil price, resulting in lower inflation forecasts, with 1.2% envisioned for 2019, compared with 1.3% originally forecast, and 1% for 2020 and 1.5% for 2021. Thus the need to stimulate the economy to get it closer to 2%. Draghi also adds that it's now up to governments to change their fiscal policies to get their economies moving, as there is little more that central banks can do. So what are we to make of all of this? Well, certainly Europe is forecasting problems ahead and has now decided that stimulus is the solution. There is still some hope that the trade dispute with China will be resolved and that a hard Brexit does not occur. Now, if these two assumptions fail, then one can expect the stimulus to increase further and faster. This is supported by virtually all European stock markets, rising by around 1% today, and Wall Street is also expected to open higher. Now, whilst this stimulus is not as large as anticipated, it will certainly please equity markets, and for now, gold and silver too, though we do expect them to fall back a little from these current levels mentioned earlier. There is no doubt that easing monetary policy is the way forward as far as central banks are concerned, and many of them are encouraging their governments to alter tax rates and perhaps increase spending into their economies. While this happens, we can expect ever-increasing stock market prices. And what we have to attempt to assess is how this then affects the demand for gold and silver. Certainly, bonds are becoming less attractive because of zero or negative yields. But if markets are being stimulated, at least for now, equities become more attractive again. So defensive monies will go into gold and silver, and speculative monies into equities, at least for now, short term. We must not forget, however, that as rates fall and currencies devalue, then this has an upward bearing on precious metals. So it's quite feasible we could see them rise along with the equities. Now, our contention is that whilst we're not expecting gold and silver to rocket, we are expecting them to pull back a little, then advance a little more, and back and forth. But over time, they will be the ultimate beneficiary from all of these moves. The question, in reality, is when and by how much, which no one at this precise moment can realistically answer. So the best suggestion for most is to acquire on dips if you're underweight, and do not chase the market. Let's also not forget that there are still some geopolitical crowds on the horizon which still have to be dealt with. But the message from today is yes, more monetary easing, but more so in the future rather than today. So to some degree, it's careful as she goes. What do you think? Do share your views. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.
Glory, glory, hallelujah.